Hello, everyone, and welcome to another episode of the J22 Report. Today, we have a returning guest. He'll be going over this month's trading action. Rahul, thanks for coming on.
John, thanks for having me on again.
So, I guess the first question I want to go to is with gold. It began the month correcting some. It hit the 1220 mark and then went back up to roughly where it is now. I think it's like 1260, 1265.
Yeah, 1271 right now.
1271, wow. I was way off. You can tell it was off the top of my head, but the gold stocks have seemed to lag. Why do you think the gold stocks are lagging?
As you mentioned in some of your videos and conversations we've had, the GDXJ, the mining index, that index was rebalanced. So you could see like an ETF like that, it's not been following the gold stocks due to the rebalancing. But the overall sector in general, well, I haven't looked too much into these mining stocks, but I do follow technicians. I'm not a technical analyst by trade, but some of these individuals who are technicians are saying that gold should have some sort of resistance at the 1300 level. And there are savvy technicians that indicate that the gold miners usually give an indication of where gold prices may land. And this could be a divergence between gold mining stocks and the actual gold index, where you could see these mining stocks just giving us a clue of where gold could potentially go within the next month or two.
Yeah, that's what I always was told, that gold stocks are a leading indicator. I would just thought maybe this time, for this little period, it might be different because of the rebalancing. If they're always selling to get out of an index, then, maybe it's not such an indicator for this month.
You have to also realize, sorry to interrupt,
Yeah.
the month of May, seasonality perspective, is not strong for gold and silver. I don't know if you remember 2011, gold and silver got whacked, especially silver, after bin Laden got murdered, in quotes. I'm not going to get into that, but once he was killed, you saw silver got smacked down, and year after year, silver and gold don't tend to do well in the month of May. And if you look at the gold price, they have done reasonably well compared to the historical trend. So maybe the gold mining index is just following the historical trend.
Yeah, that's what I would say. I think it's a combination of that and the GDXJ, just from my opinion. One thing that's actually very interesting to me is I was talking to my fellow coworkers in the bullion industry, and what I thought was very telling is that they told me that volume for buys right now, for like just sales, not like actual sales, but volume, like number of trades they perform now, are down 30 to 50% from last year around this time.
Are you talking about just gold and silver trades, or just talking about overall market trades?
Oh, I'm sorry. I mean, like when I talking about trades, like in the industry, when you sell precious metals, when we're talking about sales, we talk about like how many. When we measure like sales success, we'll talk about number of trades and then revenue, which is like dollar amount. And they say the number of trades, like number of purchases they're getting, are declined 30 to 50%.
I mean, I don't really look at the price of gold and silver versus what the precious metals dealers sell. I look at mainly like the futures markets, because that's where prices usually are determined, based on my opinion. But I know some people, I used to talk about this, and they used to blast me on YouTube when I had a much bigger following.
Yeah. Well, I just look at it for sentiment reasons, like the retail, like how, are they bullish or bearish? Like I actually look at it as like a contrarian indicator. If like when people were talking about in 2013 how great Silver Eagle sales were, I'm now thinking that's a contrarian indicator because the price kept going down. So I actually like to see the retail investor worn out, in my opinion. In terms
Yeah,
of,
but speaking of retail investors, I've talked about this before, about the commitment of traders, and this was as of May 23rd. what was quite interesting was that the non-commercial money, the retailer side, or actually like the hedge fund side, the small traders, they actually added long positions to gold, added 20,000 contracts, and they got rid of 12,000 short contracts. And the hedgers, the commercial money, like you could say people who deal with gold on a daily basis or for a business perspective, they added roughly a net 28,000 contract to the negative side. So they're shorting, the small traders are getting long. So who knows? If this trend continues, gold would probably go lower.
Yeah.
I mean, short term could go higher, but then after that, you see these heavy moves to the downside. But I'll need more data, meaning I'll need to see the weeks ahead.
So, what trades are you looking at right now? Any specific trades right now?
Well, one trade I was doing for the last 1.5 weeks was shorting natural gas. And the reason why I was shorting natural gas was the commercial hedgers, based on the Commitment of Traders report, they were the most net short, at least for the last 2 decades. This is data based on Quandl.com. And the last time they were this net short was in 2006 and in 1999. And both instances you saw natural gas get slammed. In 2006, I believe this was August of 2006, you saw natural gas, it went from like 9 to 4.75. So it was like over a 50% haircut. And ever since I saw that data a few weeks ago, natural gas has gone down from 3.4 something to right now it's like 3.20, but you have to remember there's a different contract out there. I was looking at the June contract before, but now we're on the July contract. So I still expect some moves to the downside for natural gas, but I'm not going to add more short positions. Another position that I'm looking at, I think I've told you before, I don't know on the podcast, the hedge funds are the most net short on the Canadian dollar, at least for the 2 decades, based on the Commitment of Traders report. So I've just put on a contrary trade compared to what the hedge funds do because they're dumb money at position extremes. So I'm going long Canadian dollar. I don't expect it to go up overnight, but like a week and a half ago, it did bottom out temporarily at 0.729-ish. And where's it right now? 0.74-ish. So I expect moves to the upside in Canadian dollar. And the euro, what I'm looking at, the commercial hedgers added the most net short positions since 2011. What happened in 2011 with the euro when this happened? It went down from 1.50 to 1.20 9-10 months later. I'm not saying you're going to see that kind of haircut, but I do expect the euro to go down, which would mean this would push the dollar a little bit higher than where we're seeing it. Maybe closer to I think it's the 100-day moving average, close to 100.16 as of Friday. Actually, what are you looking at?
Me right now, I'm just looking for a good buying opportunity in the miners, because right now I think gold's going down, the miners are going down, and June is always like a really weak month for gold. Like I was looking at, I still remember 2013 silver bottom around 19. June and December are really just are always weak months, it seems like. Like even in 2015, December 2015, that was like the bottom of the bear market. Now we're in this like consolidation phase, in my opinion, of the bull market. I'm waiting for oil to go down. Like I expect oil to go down to 35, and there's like a couple of stocks I want to buy. I'm not going to say them on air, not because of like disclosure purposes, but mainly like I want to get paid for them, so I'm not really. I'll either write them in a Seeking Alpha article, or if someone wants to give me some tip jar in my Patreon account, I'll let them know. But you know, I'm not gonna give that out for free. But I'm looking for
the only thing. Go ahead.
But I'm looking at oil, and the thing is, sentiment's really bad right now. All the traders, anytime OPEC does a cut deal, the traders are going, oh, it doesn't matter. Shell's going to replace that with production. But I think around 35 that's really my target. So right now I just have some cash and I'm just waiting for better opportunities. Like the stock market, I'm also looking at the stock market right now. I think it's going to go to 2,500 soon. And the reason why I think that's very important is that this commodities bull markets don't happen when everyone believes the stock market can't go down. Like I've heard a lot of people say the stock market can't go down, or over time it will always go up. And I remember in 2008, 2009, or 2009, 2010, the reason that gold had such a bull market, even though the stock market was going along with it, people were afraid of investing in the stock market. And I think that fear needs to take place, but I don't think it will happen until there's a real sizable correction. And I think with the Fed raising rates, I think that correction is going to occur because they always look for a correction, but if interest rates are at zero and businesses are allowed to borrow and then buy back shares, there's going to be buying power to push the stock up. But if interest rates keep rising, those share buybacks are going to start decreasing and decreasing. So I think a floor is going to start to fall out even slowly. So there's a couple of things, like I'm not looking to short anything because I think they'll pause on any, I think they'll do what they can to keep the stock market afloat, but I wouldn't really look to short anything until interest rates get up to 3 to 4%, in my opinion.
The thing with oil that you mentioned is I've talked about the relationship between the Canadian dollar and oil, and they don't always go up hand in hand, but over time the Canadian dollar does rally with oil. And based on the data that I've been looking at, like I told you, I just see not a monster rally, I just see a decent rally coming in the Canadian dollar. If that happens, that should be bullish for oil. But the only thing that's preventing me from thinking that oil is going to go over $55 a barrel is the fact that there is still this problem with inventories. Inventories numbers are still showing that oil prices should be lower than where they are right now. And once we get rid of this inventory problem, then yeah, the sky's the limit for oil. But until we see that, that is just one aspect of oil that I'm not too confident in saying that oil could go over $55 a barrel. I think that we will go over, or we will get to $55 a barrel, but after there, I'm just a little iffy on that.
What's your time frame for like the getting over 55?
Getting to 55, I would say within the next few months. But over 55, we'd need to see inventory numbers go down. We'd have to see actually a monster rally in the Canadian dollar. I mean, the only reason why I'm really bullish on the Canadian dollar right now is the fact that the last time the hedge funds were this net short and the commercial hedgers were this net long was in 2007, I think early 2007. And you saw a decent rally in the price of oil, and you saw a decent rally in the Canadian dollar. I think it went something ridiculous, like 15 to 20% higher for a currency within a relatively short time. And yeah, this is just one reason why I just see $55 a barrel coming in the next few months, even though a lot of traders may not anticipate that.
Actually, Rahul, I gotta ask you a question. The main reason I gotta ask you this is I was listening to a podcast earlier today. It's actually before I went to this barbecue, and this guest on this show, I'll just say the show, it was the Daily Gold. But this Jordan from the Daily Gold asked this guy, when do you think this like 9-year bull market in equities is going to end? And this guy literally said, we were in a bear market in equities from 2014 to 2016, emerging markets and everything. So we've been in a bear market for a while, but we're just starting a new bull market in equities. And I was wondering, did you notice any bear market anywhere, like in equities at all, like from since 2009?
I don't really follow international markets to the extent that I do like American markets. I mean, you could correct me if I'm wrong. China experienced a severe pullback. It must have been what, 2000, early 2016, late 2015, but then Chinese stocks started to rally hard from there. I haven't followed the Brazilian market, but I do remember when oil was tanking, Brazilian stocks weren't doing so hot because they depend on just the oil sector.
Yeah.
But I know some international markets weren't doing as well as the American markets, which were just flat, you could say. 2015, we did see that high in the S&P, but then you saw that crash in August. Not a crash, but a hard pullback in August. And ever since then, stocks have rallied since October 2015.
Yeah, like my opinion was like I don't really.
I mean, yeah, you did see another hard pullback. Go ahead.
Oh, go ahead. If you're, I thought you were finished.
No, I mean, like you did see another hard pullback in February of 2016 when oil was crashing. I think it was like 15,200. So someone may say that, hey, you did have a bear market in 2015 to early 2016, but then the market resumed higher. But it's just interpretation-wise.
Yeah, like my opinion is like one reason I was like I told Jordan I was like, yeah, once I heard that I just stopped listening because like when I'm somewhat American centric. If people say like a rally in equities, I assume U.S. markets. But in terms of like bull markets and bear markets, I don't like generalizing and putting them all in at the same time because like I just think a lot of countries' financial systems are different. Their economies are different, and I just don't like grouping. So like if I say equities, like if I just don't like separating, or I don't like grouping like U.S. with Europe and Asia or anything. I think they should separate each individual market. So like I do agree emerging markets had their problems over like Russia.
Wait, hold on a second. Mark Zuckerberg says that we should embrace this globalist system, that we are all citizens of the world. So maybe you should change your tune, John, because that's what Mark Zuckerberg says.
Yeah, well, I know what Facebook's going to do after hearing this. Facebook's going to mark my page as, what is it, fake news now? Like, if it doesn't fit. Or what's he going to have? He's going to flag my page now on Facebook. That's what he'll do.
Yeah, just don't go to Europe. That's all.
Yeah, he'll
because you could get arrested for hate speech for saying something non-controversial.
Oh, I know. I like the funny thing is I always wanted to visit Europe. Now I have no desire ever to go to Europe.
Don't go. Don't go.
Oh, I
went on my honeymoon to it, but that's it.
Oh, you won't see me in Europe.
I'm not visiting Europe until they clean their mess up.
Yeah. Well, I'll be honest. There's only one place I would go if I had to visit Europe, and that's Poland. They don't have any crime because they're not dumb enough. So they're willing to go through sanctions.
Well, actually, Merkel will start fining them.
Yeah. Well, yeah, Poland already said bring it on, so I was just unbelievable. Yeah, Zuckerberg, I can't believe... well, I can believe he said that. Never mind. I don't really mind that. So it's sort of... anything else catch your mind this month?
One thing I did notice is that I saw on Facebook, I'm not going to mention this person's name, I just saw the dollar just corrected, right? We could say that it corrected around 3 to 4%. The dollar index is close to 97, and then he says, hey, it's another day, the dollar is down, right? And I'm thinking, like, all these gold and silver pumpers, I mean, I used to be one of them, if you could say that, and they're saying that, hey, the dollar index is down, and I'm thinking to myself, okay, you really weren't talking about this when the dollar was rallying. I mean, they were quiet when the dollar was rallying up to like 100, 101, and they're getting excited for a 3% pullback. Now, that being said, I try to look at some technical information about the dollar. And like I told you, I looking at the commitment of traders report, and I just saw this huge short position coming in the euro, and that could just be a sign that, hey, this dollar correction may just be short lived. But I was just thinking of that. I still will need to see more data and see what fiscal policy and monetary policy comes about. But that's just one item that just came to my attention. I think you did talk about that earlier too, that people are getting excited about gold and they're getting excited about this short-term dollar sell-off. So that's just something to watch out for.
No, that did worry me because I was like bullish on gold for a little bit because I heard like I'll just say this is another video, but I think this one girl who said it, she was talking about she's a fundamental analyst. She actually used to work for America too, so but anyways, she said I'm a fundamental analyst, you're a technical analyst, and all our analysis is becoming aligned, so I'm happy. And I remember I was like, and gold was like around 1220, and I decided to make the call like it's going to see a rally because I got scared when everyone's on that trade. So I thought it was going to go up because they were talking about the summer doldrums. But now I got people excited and everything, and I think this dollar correction is going to be short-lived in my opinion. Because it only goes down to 92. It was up at like 101. Like it went like the whole... I remember when the dollar bull market started, it was at 60, and it went up to 100 in a couple of years. So
is it 60 or 70?
Actually, it's probably 70.
Yeah, I was thinking maybe 72-ish.
Yeah, somewhere around there. Thank you for correcting me. And I actually mean that. I'm not really. But, you know, it's due for somewhat of a pullback, and I know 92 has some support there. And if you hear all these, like, gold and silver pumpers who've been wrong for, like, the last 4 or 5 years, getting excited and cocky, then it's probably going to go the other way. So that's why one reason I said 1300, you know, that's a resistance there. And I'm not too confident that will break it. Like, don't get me wrong, I'm like the biggest gold bull. I'm probably a bigger gold bull than the gold and silver pumpers, honestly. But I'm not really that confident for the next year and a half. I think the Fed's going to keep raising rates, and I don't think they're going to soften their rhetoric enough over the next year and a half. So, actually, you know what I forgot to tell you is that I was talking to a couple of Chinese people, and they're from China and everything, and they were telling me that I asked them about gold, and they said, yeah, we buy gold, but only when the price is really low. The only problem is in the U.S. you can't buy gold. We're not allowed to, so we don't really know what to do. And I was like, this gold bull market is definitely not over. If these are people that buy gold regularly. If they don't really know that you could buy gold in the U.S., then we're far from like a retail euphoria, in my opinion.
Yeah, we're not there yet. And like I told you, you'd have to see what you saw in 2010, 2011. I mean, that's when people get the prices up of gold and silver. You start to see retail speculators going into the futures market, but you don't see that as much as you did in 2010, 2011, where they got wiped out. But until you start seeing like buy silver crash JP Morgan, I don't see that hardcore rally yet. But once we start seeing that, just wait. I mean, gold will do what it did in 2011. I think it went from like 1200 that year to what, 1900? A ridiculous move to the upside.
Yeah, it was like in 6 months too. I think it went up because I remember.
Is it like January through September?
Yeah, it was something ridiculous. It went from like 1,000 to 1,900.
Right. I mean, like there were some Mideast debacles done by Hillary Clinton. I think that was when they went to Libya, they went to Egypt, they had the whole Arab Spring. I think that was part of the catalyst, and then this whole buy silver crash JP Morgan craziness with Max Kaiser.
Well, what also did it is like in the 2008, during 2008, like during the crash a little bit, it went from 700 to 1,000. And then it went all the way back down to 700. That was like the deep heart of the crash. Like in the beginning of the crash, it actually went to 1,000, but in the heart of it, like October on, it went back down to 700. Then it started rallying again from 700.
Started rallying in November. It stabilized in November of 2008 when Bernanke said, "Hey, we're gonna have QE to infinity."
Yeah.
And that's when people started like, "Okay, well, let's get back into this." And then,
yeah,
2009, like March or February 2009, that's when you started to see gold and silver. I think it took off a little before the stock market, which was March 2009.
Yeah, but I mean, it went from 700 to 1,000, but like in a healthy uptrend. But what made it really just explode over a couple of months is, most people don't remember this, but the IMF wanted to sell a lot of gold, not because of manipulation or any of that fake stuff. The truth was, it was just at all-time highs, and they just wanted to get rid of it while it was at all-time highs. And the Bank of India said, we will buy every ounce of gold you have. So whatever you want to sell.
Oh yeah, I remember that. And then it went $300 within 6 months in 2010, I think.
Yeah, then that's when it really
went
holistically high. So like I see a lot of technical people saying, "Oh, we could see gold at 800, 700." And I'm just thinking, I think the Bank of India has made it clear the days of 3-digit gold, I think, are over. Like that's.
Yeah, I mean, you still have to see a certain amount of things. If you see a crash-like scenario like 2008, or I mean, like even a mini version of 2008, I think people are going to liquidate hard assets. They're going to just get everything to cash like they did at that point. I mean, if you see a Eurozone crash or something like that, you could see the dollar rise up substantially, and maybe in the beginning gold would rise, but like 2008, gold rose, but then in October of 2008, everything just crashed. And you could see a similar situation where gold may temporarily go down below $1,000, but I would definitely be a buyer at that time.
Actually, you brought up a good point, like with the Eurozone. One of the things Jim Rogers told me, and not that he gave this to me personally, he didn't give, this is public, that what he said to me was public. So, and I think he said this to other people publicly. So, if you looked at one of my past interviews from my old company, you'll see it. But anyway, he said he always keeps a large position in dollars because no matter what happens, it's deemed as a safe haven. And if there's big problems with the Eurozone, that's going to be bullish for the dollar, and in my opinion, it's bearish for gold.
Yeah, you make a very good point. I've done a lot of videos explaining the dollar index and how it's skewed towards the euro. And the composition of the dollar index, not many people talk about this, but this is how it's composed. 59% is the Eurozone index, or the euro. 10-11% is the Japanese yen, 10 to 11% is the British pound. So mathematically speaking, the euro holds more weight on the dollar index than any other currency out there. So, like you said, if the Eurozone does crash, what happens to the dollar? The dollar is going to substantially go higher. I mean, what could neutralize some of that effect is the Japanese yen, because when everything crashes, everyone goes to the yen, right? Which makes the dollar weaker against the yen. But that's only 10% of the dollar index. So if you see a euro crash, that still will outweigh any move that happens in the Japanese yen. And yeah, so that's just something to note.
So I have a question. You were talking about the yen. I know you do the yen carry trade. Do you have any opinion on the yen, or have done any recent stuff on the yen?
I mean, the only thing that I've noticed is that in the Japanese yen Commitment of Traders report, I think it was last week, don't quote me exactly on this, but I'm just going from memory. I think the commercials are a net 70,000 contracts long. And if you look at where it was in December of last year or December of 2015, they were over 100,000 contracts long. And that time that was where everyone was selling gold, but then it started to rally. And now we're at a point where it's like, what, 70,000 contracts? So it's not giving me too much of an indicator on gold per se, but there is somewhat of a decrease in the net longs for the Japanese yen, so this could have some effect to the downside in the price of gold. But one bullish aspect about gold, if you look at the composition of the Japanese yen, is that the commercials are still net long, so this could potentially be good for the gold bulls if they want to see any evidence that, hey, the move in gold isn't over quite yet. And like I told you, I always like looking at the Japanese yen in terms of determining the price of gold.
All right, that's pretty interesting. So I don't really follow the yen that much. So I like hearing. I'll be honest. Like I'm one of those people. I don't really follow the yen. I don't do any trading with it. But I don't do any. I love hearing about the yen. I don't know why. I just do like hearing about how it's going and where it's going, because it seems like Japan's like the forgotten country nowadays. Like everyone talks about the emerging markets. They talk about resource-rich countries. China. Well, China is an emerging market technically, but you just never hear about Japan anymore. So.
Right. I mean, speaking of Japan, I don't know if you remember the headlines over a month ago. The mainstream media were saying like, "Oh my God, we're going to go to nuclear war with the North Koreans," and Donald Trump had a meeting with Abe in Japan, and a lot of people just said, "Oh, Donald Trump's just talking to the Prime Minister of Japan to discuss nuclear war situations and how they could protect the Japanese," but part of that meeting may have been about this yen carry trade. I don't know if people actually noticed this. Maybe only savvy traders and investors. The Japanese yen was rallying at that time. It was like at 109. And then right after that, market sell-off. The market popped up. The Japanese yen carry trade was back in action. And we see the Japanese yen sell off at least 2 to 3% after that time frame. So I'm not sure if Donald Trump was told by his advisor to talk to the Japanese Prime Minister about the yen carry trade and how we could propel the stock markets higher. But that's just me just speculating what Trump may have been talking to the Prime Minister about, besides the problem with North Korea.
Yeah, it could be. Like, I'll be honest, I thought he was talking about the economy. Personally, like I know SoftBank did some investments in other Japanese companies, so I actually thought he was trying to work out a deal because Japan's aging population, they really can't make much anymore. So I thought he was trying to woo them with tax credits or whatnot, or tax cuts or special tax breaks to bring stuff over here. So that was my. That was my thought, but that could also be, what you said. So I personally think he probably was just talking about a lot of things. Like,
yeah, I think there's a lot of things. Just the media always gets investors on the wrong side of the trade. So they might have scared some people out of buying the market at that time. And, I messed up a few trades at that time, regrettably.
Well, everyone does.
It would have been a better May for me if I didn't make some stupid mistakes. I think it was about a month ago or 5 weeks ago. But whatever.
All right. So, any concluding thoughts?
The other concluding thought is we did talk about gold, we did talk about yen, but we didn't talk about the bond market. And what I did notice is you're seeing a rally in bonds as of right now, and if that trend reverses, right, if you start to see the bond market sell off, that could actually make gold prices go down. I always talk about gold and yen, but the bond markets also do play a part in determining the gold price, in my opinion. And if you start to see a reversal in bond prices, they go lower, interest rates go higher. And just from a trading perspective, the knee-jerk reaction from all these speculators will be, okay, let's sell our gold, let's sell our commodities, let's short the bond market. And I did notice in the positioning sizes of the commercial hedgers, they are starting to go net short on, for instance, the 30-year bond. So that's just one aspect on my mind. I mean, you did talk about how gold could maybe have a resistance of 1300, and how the inner market relationships may work out is gold goes down, the bonds sell off, interest rates go up, and you could see the yen also sell off at that moment too. So I'm just keeping an eye on this, but I'm just seeing how market participants are reacting to uh, certain situations going on, and that's just one thought I have.
All right. That's actually pretty interesting. So I just want to say thank you for coming on. And if you like this video, don't forget to hit the like button and subscribe so you can get more podcast entertainment. So thanks for coming on, Rahul.
Yeah, thanks for having me on again.